Good afternoon, everybody. Welcome back to The Opportunistic Trader. It is 1 p.m. on October 30th, and we're joined now by Tom McEntee. Tom is an equity trader. He's very active in the chat rooms, been trading for over 30 years. He's proven time in and time out, giving us good risk-reward opportunities, good ways to getting into trades, structuring trades. And, the past few days, that's what we've been doing regarding earnings, looking at the earnings for the week. Today, let's focus on Facebook, eBay, Apple, and some other names if you have questions. But Tom, how's it going?
Very good, Mike. Better than the people who bet the Buffalo Bills last night, I guess. That must have been a tough way to lose.
I looked at the score, I think at halftime, and I was like, wow, they got a shot. Maybe they got a shot, but I did not think they had a shot and did not watch a second of the game.
They had a heck of a shot. I'll tell you, Jason Witten, 6 foot. You can replay this. 6:14 to go in the game. 18-6 Patriots. Bills ball right at the New England 40. 6:18 to go. Jason Witten, he has to interject and says it's very important that Buffalo score here.
Yeah, they've got 3 points the whole game. Yeah,
this guy's getting paid this guy's getting paid for insight like that. That's fantastic.
Well, in his defense, I'll be a Jason Witten defender here. You can't, as an analyst, say this thing is over. They have zero chance. Let's just sign off. Go to bed, everybody.
Well, but I'm just saying it's very obvious that they have to score. They're down 2 touchdowns. We need 2 touchdowns here. I think my if I had a 9-year-old daughter, she would know that at that point.
I think I've heard you talk about Jason Witten a lot over the last few weeks. You and Larry I think it's your giant lover mentality. He's crushed you probably a few times over the years. That is part of the reason you don't like him.
Not a Giant fan. Loved him as a player. He is out of his freaking depth as an analyst. He's the worst since Dennis Miller. If you listen to him, he's establishing himself. That's a word now. He's establishing himself as the worst analyst I've ever heard. Awful. He's up there with Dennis Miller, who he would just throw out $20 words ad infinitum and just say nothing. And he was just terrible. This guy is taking he's taking the baton from Dennis Miller and running with it. He is bad. I guess as long as you wore a star on your helmet, you get these big network jobs.
Well, I was about to say part of what worked out well for him is Romo is doing very well, and so they were like, "Yeah, Romo worked out well. This is his best buddy. Let's go with him."
There you go. That's all you want. Get Romo.
I'd love to talk more about this for hours, but we got to get to markets, and got a lot going on today. So let's start looking at Facebook. It's amazing. Even actually, before we get to Facebook, let's just reminisce about Netflix here. We were talking about this one. It traded from 340 up to 405, and this morning it just traded 271.20.
Yeah, it's just
on that one.
Incredible, right? I mean, that is by my calculation, that's about a 33% haircut, right down 130 on 40. It's about a 33% haircut. 32% haircut. Yeah, incredible, right? I mean, I got very lucky with that because I wound up having this week 300 puts against some puts that expired. Sold some stuff. I bought stock at 310, obviously way too early, but I still had some extra puts and I kicked them all out. And I rolled down to the 280 line. November 16 and sold some upside calls. Oh, I didn't expect this. Who the hell would expect this? Just an incredible outsized move. I mean, the moves are just extraordinary in all of these FANG stocks. X, the only one, the apple of everyone's eyes. And that to me, and it may not coincide with a NASDAQ and or SPX and or Russell bottom, but I think the market will be, to me, I mean, it may have it already, but I mean, to me, that would be the ultimate green light would be for this thing to fill its gap down to 192.20, whatever the heck that gap is from the previous earnings from Org 1. It would be incredible symmetry, 90 days. You'd also be 30 days from the last high in SPX, 29.37. $3 shy of that high, said, I guess, about a week prior. That came in on October 1. So I think Apple filling that gap, that yawning freaking chasm of a gap down there at 192. We spoke about this a lot. You and I spoke about it. Larry and I spoke about it. The most well-capitalized company in the United States, if not the world. I'm not sure.
It is a country.
Right. Yeah, it is a country. It's certainly a cult. That's for damn sure. And, it moved, if I'm not mistaken, I mean, it was up 20% in 30 days. I think you traded 228 somewhere near the end of August. It was just extraordinary. It's Apple, and it's not a biotech. But I just think
Well,
I think
let's come back to Apple because that
done.
one's coming out
Facebook
Thursday. Let's go Facebook. It's coming out today. Here we are at 142.50. We were trading, I believe, was it the last earnings when we traded up to like 210ish or 215, and then we've come straight off. It might have been 2 earnings calls ago, or it might be the last.
No, you're
one.
right. You're right. You're
It
absolutely right. It was
one.
like 217. Yeah. You're 100% right, Mike.
That's we
correct.
traded above 210 there, and here we are at 142.50. What are the options telling us about today? What's the straddle, and what's the different ways of playing this one?
All right, where I'm looking at this, Facebook. I'm looking at eBay. Okay, Facebook has been like I said, I always go over the extreme moves based on the near-term weekly option, the one that expires this week. You know, a lot of my strategies, I'll either be long it or short it. You know, this is probably going to be in play. So looking at the greatest, I'll look at the plus minus extreme move, where I'm going to get scared. At what point do I get scared? What's been the outlier move for these for this stock? 3 days. You can have Wednesday, Thursday, Friday to trade it. 3 days post that. Okay. Went back to last 8 quarters. You know, we do this every time. The average move has been a 7% move. I mean, currently we're trading at about 13.10, looking for about a 9% move. So the average has been about a 7% move. And moreover, 6 of the 8 quarters have been 6% or less. So that's significant. Insofar as I was, I've got a contrarian bent that may or may not come across in phone conversations. I'm sure it does. The time to be looking for the outsized move isn't for when the stock has pretty much declined in a straight line from 160 down to 140. What's that 20? That's about 12.5%. The time now, maybe look historically. I think the outsized move here may happen on the upside. I mean, I just feel I sense it, and look, it feels a 4-letter word, and it is a 4-letter word, literally. I just sense a lot of bearishness. I sense, the 3-card Monte guys on CNBC have suddenly gotten all bearish now. Here we are, 300 handles lower in SPX, and nobody likes them. So I would look at
to go on that. That's what Larry was quoted on CNBC over the weekend about, was basically saying that the S&P is 10% off its high, and people are more afraid now to be long than they were 10% higher.
Absolutely right. No question about it, right? Greed, right? That's what I never understood about things was that, and Larry and I probably talked about this in a pit years ago, was that if I buy a house for $100,000, and when I pay, it costs me $10 a year to insure it. Well, now the house goes up to $1,000, but now I only want to pay $9 a year to insure it, which never made sense to me. It's like, all of a sudden you've had this asset, the S&P 500, a stock, whatever the heck it might be, and as the underlying value has increased, the price you're willing to pay for insurance always decreases, because people just get so hoodwinked by recency bias. Hey, look, this has been a 30-year freaking run, no question about it, and so no one wants to pay up for protection in a rising market. Now you get something like this. Now you're seeing extraordinary moves. You had a 105 handle move yesterday in SPX. That was, what was the range from the top to the bottom was up until Friday was about 315 handles. You moved 20%, roughly 20% of that. I'm sorry, 30%. 30% of that in one day yesterday from top to bottom. So I think now you're getting people starting to press. I think you're getting people starting to chase. Now there's some fear. You certainly saw some fear yesterday. I definitely think you saw it on Friday. And I think what there was one day last week where they kind of hit him. Was it Wednesday? I think it was Wednesday. I forget now. Where they hit him on Wednesday and they ran him up into the end of the day. So I think there's some fear here that it's almost palpable. People are paying up for stuff. It's kind of reflected here in Facebook. Now you got a 9% straddle. It's been about, like I said, it's been an average of 7% mover 3 days later. So I think here's what I want to fashion. I think I kind of think the path of least resistance is up, and towards that end. Now I've given a spread on here in the chat room, I guess about a week or so ago. So the stock might have been trading 150-ish, like in there. It was the November 16 162.5 against the November 2. Let me. You know what I'm going to do? I'm going to put this on. I'm going to put a new share on here. Watch this. See if I can do this. Just let me. If you're standing up right now, you should be clapping, Mike. Okay. It was a Nov 16 1. 162.5. They're currently trading at $1.60 against the November 2nd 160s. I paid 33 cents for it. Hey, cool it over there. It's currently trading about 45 cents. I want to bring, I am cognizant of the upside here. I think it could definitely do it. Maybe get a 10% move on the upside. 12% move would be an outlier. I want to play the outlier, but I'm going to move further out. Now, if you didn't do the spread from last week, that's cool. You can do it now at 45 cents, but I'd rather lay off, and I wouldn't do it anymore. I paid 33. I paid 39. It was available at 33.
So I'm sorry. Can you go over those strikes again that you'd be doing?
Yeah, sure. The one I put in the chat, I think it was Thursday, Wednesday, whatever it was. I bought the November 16 162.5s. I sold November 2nd 160s. I paid 39. I think Gabe B asked me about it. I said it was available at 33 yesterday. You could have had it there. I think it's currently trading around 40.
So you do that with no position, right? There's no equity position. It's just the two legs.
Correct. If there's an equity position involved, I will definitely mention that. Yes. No, there's no equity position here. That's just a two-leg straight upside call spread. At the time, probably delta neutral. Probably still delta neutral. I'm just looking for the vol compression to be obviously geometric in the front month in the November 2 tenor. If I get that outside move on the upside, it's going to take a lot to put the 160 calls in the money. Obviously, now it's going to take about what are we about 17? Now it's going to take about a 12% move roughly to put them in the money. So I think I'll profit on the geometric decay there. I'll get that rapid theta, and I'll have a runner out on the November 16 line. But now we've moved so far away, and obviously the vol is high, and we've said this since we started these earnings things about 2 weeks ago. Vol is high for a reason, and I get it, and it should be. I like this spread here. I want to buy. It's in the chat. I want to buy regular weight deck. Regular weight deck once. I'll put that. You can see this, right? Regular weight deck 170s. They're currently, this is the vol. The vol trading, this thing's trading at about a 40 volatility. You see that? You can see what I'm doing here when I'm notating this stuff. Yeah, okay.
Yeah.
Currently, okay. So I want to buy those regular weight deck 170, and you got to realize. I mean, I know you're aware of it. I know Larry's aware of it, and I'm assuming most people are aware of it. But yeah, no, 170 is a long way away from 143. I get it, but you're at a time right now where nothing means anything, and it's taking on the look of a random walk in a lot of respects. So I think you want to stay as far away from the fire as possible, because I think the possibility of a spike and how dramatic that spike can be, that probability is definitely ramped up in this environment. Look, I'm always speaking from experience, from being on the freaking wrong side of it more than one time. So I want to stay. I don't want to get involved in the 150 line. I don't want to get involved in the 155. I know it's had some trouble at 160. Maybe that's an area you could look at. But you got to be cognizant of the fact that if it does rally, I think what you got here right now are panicked longs and nervous shorts, and that's a combustible freaking mixture. So anyway, as I get off my soapbox, I want to buy the deck 170s, regular weight deck. That's deck 21 expiration. I'm going to sell regular way November 16 line, November 16 expiration 165s. I think that spread's trading around 35. I paid 37 because once again I'm retail. That's a good spread. I will collapse volatility in Facebook down to 30. That's important. We talked about this, Mike, but I think it bears repeating. I want to look at where volatility is going to be traded past earnings. I mean, earnings are a very binary event. Now, I don't think that Facebook is going to come down to its, this is where it typically resides post earnings, right? I mean, it comes down to like 22, and here it is again. I think in April. It was in April, right? Comes down to like 24. So I don't think we're going back. I don't think we're going back to the low to mid 20s anytime soon. Not with the general market being the way it is, and the market's susceptible to these to these violent sell-offs and what I would think are spike rallies that should occur. I would think relatively quickly. Okay, I'm going to look at vol and say, hey, you know what? I think volatility is coming into 30 in December. Out 2 weeks. It's currently trading around 40. I'll knock 10 clicks off that thing. 10 clicks at points. I'll knock 10 clicks off that thing. And where am I going to have some pain? That's what I want to know. Because, as we always talk about here, we talk about the risk. Reward takes care of itself. Take care of the risk. The reward takes care of itself. With that spread, if I knock volatility down to 30 in deck, and I'll let the Novembers float to a 40, let them roll at a 40. Out 2 weeks on November 16, I got room down to 130 on the downside, up to 172 even on the upside. You got a lot of room there. And I'm taking the worst of it in volatility. I'm knocking it down to 30 in my Decembers. It's currently trading at 40. Okay. That's a real cheap spread with a lot of room. Okay. Could Facebook trade at 175 in the next 2 weeks? Sure. I don't know. But I'm going to bet that it probably gets contained by this range, this 130 to 172 range. I got a lot of room and the game's on. Okay. If I get any type of rally, I mean, God forbid I do get a rally up to the 155, 160 level. I mean, that's a home run. So that's a real cheap spread. It's available, I think, 35 cents currently. Like I said, I paid 37. That's a good spread from a risk reward standpoint, from a volatility standpoint, and from the fact the stock is so dramatically oversold. Look, I said that at 150, so obviously I'm wrong. Okay, next trade, Mike. We want to talk about eBay?
Yeah, sure.
I got some good stuff there, actually. Mike, because unlike Jason Witten, I do my homework. Ooh. eBay. All right. I think this is interesting. You had a gap filler this morning. There's a gap. You have I'll put the chart up for you. Hold on one sec. Start chart. Okay. There's a gap. Oh, it's not going to show the gaps. I don't want to go around playing around with this. Here, there's a gap filler from July 20th, 2016, 7/20/16, $27.14. Fill that gap this morning. You got an upside gap in this thing that fills at 30 spots 76, created about 2 weeks ago, if I'm not mistaken. Okay, eBay. I want to put this on here. New share. Boom. Okay. You got an upside gap in there that fills at there you go. Okay. You got an upside gap that fills here right here. 30 spots 76. Actually, I got 30.76 on one of my things. I see 31.30. That's from 10/18. That's from a long, long time ago, like 12 days ago. 50-day comes in here. I got a 50-day somewhere around the 31 and a 32 and a half level, I believe. Okay, I want to leverage this. I think this thing's kind of overdone. I mean, we got down as low as what 26.36 yesterday or something like that. I mean, this goes back to where this is beginning of the year. We traded 47, 73, 36 midpoint. I think there's a gap to 30.76. I think there's a good chance that gap gets filled, and I can fashion something that's going to take advantage of these elevated volatilities. Now, once again, the process is this. It's on the last 8 quarters. It has been a 7.9% move. We'll call it an 8% mover on the extremes. Moreover, 5 of the 8 quarters have reported an extreme move of less than or equal to 7%. I mean, currently the straddle, currently the straddle is, where is this? Where are we now? 3rd, 27, 129, 240. And the straddle is about, 9%, roughly in there. So, I mean, that much like eBay, same kind of deal, right? A little bit elevated and for obvious reasons. So, but there's no reason we can't take advantage of that. Now, to that end, I want to buy, where's this spread here? eBay. I wrote this down. Hold on one second. Yes, this is what I want to share this screen with you. Boom. All right. I want to buy December. There you go. Okay. These are the December 32 calls. And say 36 cents. These are November 16, 31 calls. Say 29 cents. So 7 cents. Say you pay 8 cents for that spread.
Wow.
I'm going to knock follow.
I'm looking at this stock here.
Oh, it's awful. It's awful. Right. Only a complete jackass would buy it, but that's kind of where I live, Mike. If you haven't figured that out yet, you haven't been paying attention. You know what they say, Mike? They always look their best. They always look their worst at the bottom. It's true, right?
It just an ugly 2018 for eBay.
So I want to buy the 3231. It's a fair value 7 cents, pay 8 cents. You get any kind of move in this thing, you're gonna get a that thing could be worth. You could make 4x on that thing with the stock trading north of 29 in the next 2 weeks. That said, you're risking 8 cents. Stock goes to freaking zero. You lost 8 cents.
Well, that's the thing. You're structuring a trade here 8 cents to make 5 times. If
yeah, you can make 4x on this thing and it'll move to 29 in the next 2 weeks. I think you just do this and forget about it. You got room up to 30. You got room up to in the next 2 weeks. You got room up to 32. You got room all the way up to 32.75, which is the 50-day. That's where you turn down if it happened in the next 2 weeks, which would carry those November 16s, obviously $1.76 into the money. So regular way deck 21. I'll put it in the chat. Deck 21, 32 calls. I want to buy those. I want to sell the November 16, 31 calls. I'll pay 8 cents. All right, that's a real good spread. And I'm knocking volatility down to 30 and 35 respectively there. It's a 4x return with the stock between 29 and 30 on November, say November 13th. I won't even go to expiration. That's a real cheap spread. Now, I'll have other ones. Obviously, Apple's coming up, Mike. Do you want to say a few words about Apple?
Me?
Yeah, go ahead.
I've got zero view whatsoever. I'll just go with Tony Greer yesterday. Here we are. I guess yesterday on that move down in the S&P, we had that huge move down below 207 in Apple, and that took us below the key 1 trillion mark for about a matter of seconds. But what Tony Greer was saying yesterday, and he isn't expecting this. He actually thinks he's bullish on Apple. But if Apple were to disappoint,
everybody's bullish on Apple. Everybody's bullish.
But if Apple were to disappoint, that would really be a hit to the market on top of what we've already seen. Just being how overexposed everybody is to Apple. That's held in well. It's trading lower again today, and we're bleeding lower. I know it had some releases of MacBook and some different things, which I don't know, looking back historically, and I don't know if people have spoken about this, but why would they be releasing these 2 days before earnings? Wouldn't it be the sort of thing that potentially they talk about on the earnings call? I know that they like to have their sort of product releases and big shows, things like that, but I don't know. But yeah, Apple, zero view whatsoever. Here we are at 212. I agree with what Tony was saying. If this were to disappoint, it would really be a big hit to the market because everybody's hiding in Apple.
I've been saying that a lot in the chat room. All the rats are on that freaking shit. There's no doubt about it. But once what would I'll take the other tact, and I'm probably wrong. I'll take the other tact that this thing trades down. If this thing fills that gap down at 192.56, Mike, you're not going to get it. First of all, either you're in it or you're not in it. Because if it gets down there and you miss it, you're not going to be able to buy it. That's what I would think would happen, and I think it'll be so fast and so furious. And I think I mentioned this last week or 2 weeks ago. Look around. What is an SPX bottom? Wow, the market just kind of like yesterday's action at 330, 340, whatever the heck that was. They rallied 40 handles in about 15, 20 minutes. You're going to look around like, what the hell happened? You're going to see on your screen, Apple traded down at 192. What the hell? I missed it. It's trading 197 now. So I would respectfully disagree with Tony. I think that would be the most bullish scenario for this thing, to get all the rats off all these ships. They're out of Facebook. They're out of Amazon. They're out of Netflix. They're out of Google, right? 20% declines at least in all these freaking things. Apple's the next one. Got to take it out. Symmetry suggests 30 days high to low in SPX, 90 days, low to low off the earnings in Apple. I mean, that would be a perfect symmetrical kind of deal for those of us with a geometric bent. So I would respectfully disagree with Tony. I think the move down will be so furious and so fast that if you didn't have bids in, you wouldn't be able to get it. Once again, just speaking from experience, because it's happened to me before in Motorola. Painful. It was a painful couple of weeks after that. I remember that vividly. So I would say that I think that's the most bullish thing to happen. Like I like the market in here. I think there's a lot of like a lot of double positive divergences that I see. And I think you want to look long. That's why I'm fashioning all these spreads to the upside, because I think, you want to look. I think that, look, probably I could definitely be wrong. There's no question about it. I think you want to look higher. I think you want to look out. You want to look outsized higher, up. I just think the market. I'm trying to fashion these spreads where I can make a lot of money. I'm risking a little bit of money to hopefully make, multiples of X on some type of outsized move to the upside, where you're going to get that type of gasoline on a fire move with some of these downtrodden stocks. Well, look, I'll give you a quick back thing. 1997, I'm trading Motorola. Stock went from, I think, from a post earnings high, I'm going to say 68 to 43. I'm sorry, 68 to 38. Closed on the lows. You can look this up. October earnings, 68 to like 37 and 5/8. That's how long ago it was, Mike. That's when decimals were around. 37 and 5/8. Closed on a low the day of earnings. Earnings come out. Stock trades, I think, up $5, 42-ish. I think it was $70 in about a month. Just an extraordinary move. That too had a bad looking chart. Had a real bad looking chart. So that's what I'm cognizant of. Just having experience, having the benefit, that's in quotation marks, of experience, being on the wrong side of it, tells me that I want to play far away from the fire on the upside. And if I can craft some spreads that take advantage of some outsized moves here, you can do it, because now you're getting paid to sell this front month stuff. Now the vol curve is backwardated, right? For the first time, you had a low vol regime in here since Trump got elected. Probably longer than that, but it was accentuated obviously from November of 16 through January of 17. You had a low vol regime in here where everything was in contango. I was buying SPX straddles in June. I'm not SPX, Spider straddles in June of 17. You can go look this up. $1.75, $1.80 on a $250 stock. So it was like 0.7%. I buy that on a Friday afternoon. Like, even I couldn't screw that one up. That was so cheap. If you just catch one scalp, you're going to make money. They were just wasting stuff. So now, and everything's heavily backwardated. You go back here, go back to November 1. Just go back 30 days. I'm sorry, October 1. SPX vol curve, everything was heavily contango, right? I think, if I'm not mistaken, the 2 and 3 week stuff, 30-day stuff was sub 10 in spiders. 9.9, 10, with the back months trading, say 12. 3 to 6 month stuff, say 12 and stuff like that. Now that's completely flip-flopped. Now you can do the other way around. You're just going to be cognizant of where vol is going to reside out a month from now. And I think if you pay attention to those guideposts, there's money to be made here. There's a lot. There's money to be made here because people are scared. And when you get this kind of emotion, you can profit from it. That said, I'll turn it over to you.
Yeah, no, I think it's going to be an interesting week. We already saw it yesterday. Then, also with the election coming up on Tuesday, there is a lot to talk about, and a lot of earnings as well. I think that we're kind of in this environment where if you're going to disappoint, you're going to be punished on the downside more on the upside. The Facebook is the prime example. I think. What's the skew looking like on Facebook, actually?
Yeah, sure, absolutely. Momentito. Are we on the right page? I got to switch you over, Mike. When I went on my soapbox there, I forgot what screen I was on. Do you see how adroitly I'm maneuvering these pages around? Mike, you got to be very proud of this. It's kind of advanced stuff. This is like level 6 stuff for me, isn't it? Don't you think? I think it's kind of flattish. Yeah, it's flattish. Yeah. It's flattish, yeah. It's nothing. The at the money's trading, like 98 vol. 10% out of the money is like 90 vol. It's flattish. Look, the skew you want to avail yourself of is the calendar skew. That's where you can make money. Like, this is why I'm buying. Like, you can see me cursing over this. Right? Yeah, this is why I want to buy December. That's 44. That's 44 vol. I can sell this Nova at 60. Now, I'm not the brightest star in the sky. But I can take in 16 clicks on this thing and knock it down to 30. I got a lot of edge. Period. I can show it to you mathematically, but that would take that would take some time. I got a lot of edge here. I can I get that 60. I'm gonna get geometric decay if I'm right in the least. If I get a little bit of a rally in Facebook, 150 is a home run. Anything in Facebook, anything off an unch in that spread, I'm gonna make money. I got so much freaking room here. I tell you, I got a 42 point break. You know, the break even's a frame 42 points wide. That's what you want to do. This is where edge resides right now. You can sell 60, you can buy 44. Yeah, I get it. It's only 2 days. You want to look at something here. This is what I think is interesting. I think bears watching. Here's we're trading 140. Where's Facebook? 142, 141. All right. So that's why you're getting a chance to do these spreads. Now, when you're doing like that spread I did, the Deck 70 November 1665 is a, what am I saying? What's the delta on this thing? It's actually it's when I put it on, it's a -1 delta spread. They do really think it's a -1 delta spread with the stock trading at 142 and in 2 weeks to go and the expiration I'm selling? Of course not. It's a -1 delta spread because the volatility November 16 options is 90. I'm sorry, is 60. That's why it's a -1 delta spread. When volatility becomes somewhat reverts back to the mean, and that's what they like. And we talk about this a lot, Mike, and I should have brought it up earlier. All we're playing here is mean reversion. Period. I think maybe the stock reverts to the mean. Volatility always reverts to the mean. So that's what I'm playing. I'm playing for a little volatility. I'm playing for mean reversion and volatility. You're getting a chance to sell highly elevated volatility in near-term tenors and FB for a variety of reasons. That's why that's why I can fashion a negative delta spread. We'll call it a flat delta spread, buying a 15 delta call option out 6-7 weeks from now. December 17. I get 5 weeks of optionality once this thing goes away. I'm going to pay 35. I'm going to pay 35 to 37 cents for that. It's a cheap spread from a lot of different angles. Because what's going to happen is, if I'm right, it's a big if, obviously. If I do get a move to 150 and the no 16s come off the board, and now you got these no 70s. Now you got a game. Now you can sell another tenner, sell the stock, or cash out, whatever you want to do. But I think right now you want to avail yourself a calendar skew. That's where it is. Calendar skew is where it all resides. Now, what I wanted to do on eBay initially was I was looking at this. Wow, I mean, I really think this thing could fill the gap at 3076. I said, why don't I do a tree? Now, a Christmas tree would be like, buy the 29, buy the 28s, sell the 30s, sell the sell the 32s. Well, screw that. I'm not selling it. I'm not selling a dime option in this environment to anything. I don't care what the price of the stock is. Just not worth it. I could buy the 29, sell the 31s. I could pay 55, sell them at 18, pay 19 cents, 1 by 2, buy one at 50, buy one at 55. You still see that? Sell 2 at 19 is 38, so that's 17 cents. That's 17 cents. 1 by 2. That's great. I got room up to 32.83. Which is a lot of room, and that would fulfill the gap thing. But I don't want to put anybody in the freaking bucket where what if the stock prints 34? Yeah, and you brought up a good point. I think we did the Netflix trade, and you're right. I got to listen to my own set of rules. Is that I think there could be an enormous upside surprise in these things. I mean, the downside ain't going to be a surprise, right? So I think you got to be cognizant of the fact that there could be an enormous upside surprise. So I don't want to leave anybody open-ended on these things because it's binary and it comes off, and it's so dramatically oversold it could go anywhere. So I like the calendar spreads better. I think you want to take advantage of this thing here. We're buying 43 vol, we're selling 58, similar to Facebook, maybe not as juicy, but similar to Facebook. This is where you have a lot of edge, and this is where you want to play. Take advantage of this skew, time skew. I'm a buyer of calendars, throughout everything. This is what you're saying. Even that stupid. If you look in the chat room this morning, I had sold stock at 65.97, 9:55 in the morning. I could have bought the stock back in the 64s or some crap like that, But I bought this. What did I do? I bought the November. I bought November 1671s, 271s in spiders, and I sold a strangle in the November 2nd tenor, the ones that expire Friday. I think I paid 49. I think I paid 49 cents for that. So I sold a 71.59 strangle in the November 2nd tenor, ones that expire this week, and bought the November 271s in 2006. On November 16. Because I thought it was a better way to play it, a better way to cover my short. So I'm selling this stuff is, regardless of how you want to look at it, it's jacked, and for good reason. I mean, and now you got people nervous, and I think you want to sell these weeklies. Look, everybody's a where are we now? Where the spider? 265 ish. 264. And look at, I mean, what's amazing here. I was telling you, June, July of 2017, Friday before, with a week to go. So say call it 5.5 days to go, because I bought a midday. I was buying a straddle at $1. I was paying $1.75 to $1.85. Sometimes $1.65 on legs. Currently, with what do you got left here? 3.5 days to go. It's available for about $6.70. I mean, this is totally different. What's that about That's 4x taking off 2 days. So people paying up for the stuff. I think you want to sell these nearer dated tenors. I think you can protect yourself by buying backdated stuff, and just know where the volatility is going to reside out a week or out 2 weeks. But I think that's where you can make some money. Just got to be disciplined. Put your bids in. Let them work. You're going to get hit. People are nervous. People reach. When people are nervous, people reach. Everybody reaches. Even the guys on CNBC. All right, Mike, what else you got?
That's really it. I mean, those are the main ones. Like you were saying, Apple's obviously the main one for Thursday. Facebook today. We took a look at eBay. There'll be other things popping up. I hope that we can have you back, joining us for another half hour or so. Maybe Thursday afternoon. Maybe we'll talk later. Maybe a little bit later. I'm already booking up the schedule. We have something at 1 o'clock, but maybe at 2. But no, that's about it. Actually, the one question I did have for you, and I don't know if you can answer this. You were taking a look at Facebook Vol, and we see where it is right now. Where was it? Is there any way to see where it was 10 days ago? Obviously, they always increase the vol with earnings, but I'm just wondering what the increase in the broader equity market, what that has gone from into.
You want to look? Yeah, sure. Hold on, I'll give you a quick one.
Just ballpark 10 or 15 days.
Yeah, sure, absolutely. Here you go. What's 10 days ago? The 20th.
Yeah, ballpark.
Yeah, 30-day stuff was about 40-ish. All right.
And here we are at 60.
30 day stuff is 52. So it's up. What's that? 20%, 25%, like that. Yeah. So it's 52. Now you got to realize. Here, look, October 1. I'm highlighting that, right? That's October 1, right? Obviously, Facebook's in the middle of the maelstrom at that particular point anyway. But the market was still trading 29.37, right? It had. I guess it had come within 3 handles of the 29.40 spot something high from late September. In October 3rd, on October 1, Facebook 30-day vol was 31. Now it's 53. I don't want to buy it here, but I'll buy it here. So yes, it's exceptionally elevated, no doubt about it. Does that mean it can't go higher? Of course not. But you want to spread it. If you spread things correctly, you got to know where your exits are. There's money to be made here. Just do it. You just got to do it. Put bids in. There's a lot of things to do. Bid an offer where you want to bid an offer and let them come to you. They'll say it again. It bears repeating. In these times, people reach because they have to reach. So let them reach. How's that? Isn't that a great? That's a great way to end it.
I like it. Poetic.
And look, by the way, if I have anything for stuff that comes out between now and Thursday afternoon, I'll put it in the chat. But I'll put the Facebook trade from today is in there. I will put the eBay trade in there as well. Okay, so you'll be able to see that, and we'll talk on Thursday afternoon, whatever time you decide. I look forward to it.
And I'm seeing now GE's below $10.
That's probably time to look. I was looking to do something in there at 13, but I kept getting sidetracked. So. Sometimes getting sidetracked is good. You only remember the times you weren't paying attention and it cost you money. When you weren't paying attention and it saved you money, no one considers that.
All right, Tom McEntee, thank you very much. We'll talk to you a little later.
Thank you.